Now, a common question that investors often ask is, what do I do next? So this is a very special segment that you should be excited about because you'll get answers to that and more. We'll have 5 distinguished experts taking the stage to share their crucial perspectives on how you can manage some of the most pressing concerns, including rate cuts and geopolitics, while maintaining your long-term investment philosophy. So welcome to, drumroll, the 1-minute takeaway challenge. Each speaker will have 1 minute to present with a timer counting down. Our speakers from Amundi, PIMCO, Dimensional, Capital Group, and Neuberger Berman will deliver their 1-minute pitch on the topic, rate cuts and the US election, the road ahead for investors, and how investors can navigate these challenges wisely. So let's first welcome on stage our first speaker from Amundi. He is the Head of Distribution Sales, Dennis Ng. Dennis, welcome.
Thank you, Ryan.
Are you all set?
All set.
All right, I know you've rehearsed a lot for this, and your time starts now.
Thank you, Ryan, and thank you most importantly to the audience for taking the time to join us today. Amundi is a $2 trillion asset manager, and we've been managing multi-asset for over 35 years. Now, with shifting interest rates as well as the upcoming US elections, it's so important to have a flexible asset allocation between fixed income as well as equities. Fixed income giving you safety, equities giving you the potential upside. And that is why you should be looking at the Amundi Income Opportunity Strategy. Over the past 3-year time frame, the strategy has managed to provide exceptional risk-adjusted returns against equities, the balanced portfolio benchmark, as well as the peer group. And that is why you should look at this strategy to be able to offer you equity-like returns and fixed income volatility. And that is why you should be investing with Amundi Income Opportunities Fund and keep your money growing with Amundi as well as Endowus. Thank you.
All right, well done. Some time to spare. Thank you so much, Dennis Ng from Amundi. Next up, we have from Dimensional Fund Advisors. He is the Head of Wealth Management Group for Asia ex-Japan, and he's also a Vice President there. You heard from him earlier. Please put your hands together for Joel Teasdale.
Thank you, thank you.
All right, Joel, all set?
Time starts now.
All right, time starts now.
Ladies and gentlemen, there's no question that US elections cause uncertainty in capital markets, theory being that business-friendly presidents are better for the economy. That translates to better equity markets performance. But there is little empirical evidence to support that conclusion. The data in front of you shows the returns of the S&P 500 in every calendar year when there was a US election for the past 100 years. Only 4 occasions were the return negative. But it's fair to say there was more going on in the world than just US elections in those calendar years, such as the Great Depression, the Second World War, dot-com crash of 2000, and the global financial crisis. But what if we were to examine periods of return for the S&P 500 where you had either party with sustained control of the White House, Congress, and the Senate? Ladies and gentlemen, the returns are not similar, they are exactly the same, 14.5% average return. Please think carefully about changing your investment portfolio based on what might happen in US elections. It doesn't matter all that much. Thank you.
All right on the dot, Joel. Well done. A great look at the US elections. Right, next we have someone from PIMCO. She is the Head of Singapore Retail. Put your hands together for Alice Low. Alice, how are you feeling right now?
I have a minute.
All right, and your time starts now, Alice.
We've all heard of this phrase before. Time in the market is more important than timing the market. So to us, this means staying invested in a stable portfolio of 60% equity, 40% fixed income. This is the golden ratio that will provide the most optimal investor experience over time. So over the past 3 decades, a 60-40 portfolio has delivered annual returns of 7.2%. In other words, over 21% return over a 3-year investment horizon. And even more importantly, a 60-40 portfolio has been very resilient. You'll see, over the last 3 decades, only 2 periods of negative returns. So my takeaway here is, in a 60-40 balanced portfolio, you get the best of both worlds. Not only do you get the income, stable income generation and the downside protection from bonds, but you also get the growth potential from equities. Thank you.
All right. Well done, Alice. Thank you so much. time in the market better than timing the market. Something to take away there. Now, next up, we have from Capital Group. He is the Fixed Income Investment Director. Put your hands together for Manusha Samarawira. All set, Manusha?
All set.
All right, let's go. Time starts now.
All right, the stars are aligning for fixed income investors. 3 reasons for this. First of all, interest rates are being cut. Second of all, inflation is moderating. And finally, even though economies are resilient, recessionary risks still remain. All these things point to strong reasons to consider fixed income in your asset allocation today. So how do you take advantage of this opportunity? We think that the best way of doing it is taking a multi-sector approach to achieving income. We rely on the higher yielding sectors to lock in higher rates today, while we rely on the higher quality segments to really give you that balanced and diversified profile. You no longer need to take concentrated exposures into specific sectors. You no longer need to complicate your portfolios with strategies like that use excess derivatives or illiquidity. You can achieve very good income by just investing in a much more traditional, balanced way in fixed income markets today. Thank you.
All right, well done. Balance between high quality and high yield. Last but not least, we have someone from Neuberger Berman. She is the Managing Director and the Head of Intermediary for Singapore and Southeast Asia. Put your hands together for Madeline Ho.
Thank you.
Madeline,
Thanks.
are you all ready?
Already.
Okay, your time starts now.
Our base case for the Fed's reaction to is a sequential 25 basis point cut until the neutral rate of 3.25 to 3.5%. But the more recent data has told us that there is a chance that Fed might not cut as aggressively or even pause after 1 to 2 cut. And along with the US election, we expect the markets to stay volatile. Therefore, for fixed income investors, we do advocate you taking an unconstrained and flexible approach. Neuberger Berman Strategic Income Fund is a foundational multi-sector fixed income fund that aims to maximize income and total return within an investment-grade risk profile. Its flexibility allows investors to lock in yields as we embark further along the rate cut cycle and tactically take advantage of market mispricing to extract value across the fixed income spectrum. Thank you.
All right, Madeline, great job. Time to spare as well. All right, I need to catch my breath after all that. Quite a whirlwind of takeaways and nuggets of wisdom for everyone. Thank you all to all the speakers. Let's give them all another round of applause.